The line in the sand was crossed. Now what? That's the question on everybody's mind, and we're going to try and figure that out here today in today's Bit Break live stream. Hey, guys, it's Keith Allen. Better late than never, right? I've been trying to get to this one for a couple of days. Actually, the last stream I did, I got cut short on. I had to run out and go, be a parent, go pick up my kid from school, that kind of thing. But didn't actually get to everything I wanted to talk about in that stream. So, there has been a lot of great content floating around. I hope that you have been engaging with it here on whichever platform you follow on, whether you're watching on YouTube, whether you're following on X, or you are smart enough to be in our Telegram trading community. If you're not, I'm going to point you to the links. They are in the profile of the Material Indicators X page and on the Material Indicators web page and on the Material Indicators YouTube channel and on the Coin Market Cap channel. Like, there's plenty of places to find us. If you're new to the stream, again, how you doing? My name's Keith Allen. Glad to be with you. Glad to have you with me. I am a full-time trader. I am a work-from-home dad, and I am co-founder of Material Indicators. So going to share some things with you here today. But before I do, bit of housekeeping, like as per usual, do me a favor if you haven't done so yet, smash some buttons and help me grow this channel, for crying out loud. Been working real hard for you guys, and I do it for free. All I ask in return is for you to engage in the channel, engage in the content, and share it. Invite a friend. I'm going to give you a few seconds to invite somebody into the stream now, whether it's one of your trading buddies or if you're in a trading community. Share it, and let's bring some folks into this. These are always better when you guys engage. Live chat is open, so if you have questions, I will do my best to answer them. If you have insights, please share them. A high tide raises all boats. All right. So what are we getting into today? Well, so far, pretty much all the things that I've warned you about over the past couple of 2-3 weeks have come into play, and I find it kind of funny that, the internet is screaming with people, people screaming manipulation and they're looking for narratives that, that support their bias. And I got a couple issues with that. Number one, like the manipulation thesis, it's very convenient, right? There are certainly times where manipulation is evident. I've in fact built a bit of a reputation for myself within the crypto media by identifying it, tracking it, and sharing it with you guys. I've been published many, many times, so you could do some homework and do some of your own diligence and go find that if you don't believe me. But this is not an instance where I see that, and one of the reasons that I say that is because I'm telling you, I'm sharing with you guys the things that I see potentially unfolding over time, and then they come into play, and then they happen, right? So if we're forecasting it, whether it's days, whether it's weeks, whether it's months, whether it's hours in advance, and then it happens, how could it be manipulation? And as for the narratives, it's very easy. The manipulation narrative is a very easy one that a lot of people lean on when they can't figure out why price is moving against them. But overall, narratives, whether they are bullish, whether they are bearish, are very easy to find. And we can every single one of us can go find multiple narratives that support our bias, whatever our bias may be. There's plenty of things that you can find out there, whether it's the Japanese carry trade, whether it's treasuries, whether it's Trump, whether it's, this, whether it's that. It doesn't matter. We can find something to support our thesis or our bias, I should say. And it's taken me a long time to come to this realization, but clinging on to those narratives can really be detrimental to your portfolio value, especially when price is moving against you and against that narrative, right? If the if the macro outlook for Bitcoin is so strong, which I believe it is, okay, and don't get me wrong, I still think that Bitcoin and ETH will at some point return back to price discovery and new all-time highs. I just don't happen to think it's going to happen this year. And admittedly, I'm not great at forecasting, times. So take that for what it's worth. These are opinions, not advice. But I'm just not seeing anything in the charts that are pointing to that for me right now. And I'm open to new discoveries. I'm open to new developments. So I keep an open mind here. My bias is not, I try and give you guys an unbiased insight with every analysis. So if we want to call it a bias, it's really just my interpretation of the charts and data. And so at the moment, what I'm interpreting says confirmed bear market. And I went into that in depth in the last video. And if you're not sure, I encourage you to go watch it. But, just a couple of the things that confirm that for me very quickly. And I'll share a chart to do that. Let's see. And again, live chat is open. Hey, Flow State, good to have you with me. Always sharing your thesis in the crypto Discord group I'm in. I greatly appreciate you. Thank you so much. And hope you're enjoying your vacation still. By the way. So let me go ahead and share a chart, and I'll just really quickly run through some of the things. I'm not going to go in depth on it, but I'm going to share you some of the things that have got my attention and why I called a confirmed bear market across timeframes. And this is that's fire charts. We'll get to that in a minute because there's something important I want to share with you there as well. So I look for multiple confirmations before I make any kind of call like this, a macro call. And on the daily time frame, we have death crosses between all of the moving averages. They're all completely wound. The green 21 day is here on the bottom, the red 50, the blue 100, the purple 200. They're all completely wound on the daily time frame. And we have, of course, lost the yearly open, which we are fighting for the past 2 days. On the weekly time frame, and this is probably the most important one, we've lost the 50-week moving average for not one, not two. We're now in our third week below it. And a real important metric that very few people are aware of, but I encourage you to put it on your chart and monitor it yourself. Look at the RSI, the weekly RSI down here. And if I can expand this without losing the screen, hang on a second. Gotta see, it's hidden. Where'd it go? There it is. You can see it is below my line here. I have a line here at 41.5K, and not 41.5K, 41.5. Weekly below this line has historically meant a confirmation of bear markets. Above the line, a confirmation of bull trends. And you can put that on your chart and you can track it for yourself. Don't take my word for it or anything else that I share with you. Do your own research, do your diligence, and you'll figure it out. And on the monthly time frame, we had lost, of course, some of those key levels, right? And the yearly open being one of them. The 21-month moving average, remarkably, we've held on to despite a couple of wicks here. So this might be some hopium that we've found a bottom, but I again don't have any confirmation of that. And then another element here, if we switch on trend precognition, we have not been doing great here on the monthlies. We see this downtrend here, but look on the 3-month. The 3-month also showing us a down signal here on this time frame, which ends at the end of the year. This is an indication not likely to make another all-time high before the end of the year. Now, these are tentative signals, could get invalidated. We could have bona fide manipulation, or we could have a real catalyst that sends us back up, and then we'll reevaluate at that point. But for us to, in my opinion, to declare that we have reclaimed the bull trend, two key things, a minimum of two key things need to happen, and if that happens, other things will happen along with it, as kind of the just they coincide. One would be reclaiming the 50-week moving average. I need to see not a wick above the 50-week, but a close above the 50-week. And I'd want to see that at this point. If this week closes above it, I would want to see the next week a full candle above it with no wicks below. The second thing would be reclaiming this level here on the weekly RSI. So a weekly close above 42 per se. And again, I want to see that for 2 consecutive weeks at least. Now, in that process, if we reclaim the 50-week moving average, then we would, of course, reclaim the yearly open, and we would reclaim this first week of the yearly open timescape along the way, and of course, the trend line, which is pretty important, right? So, if there's any bullish hopium in this chart at all, it is that we are, for the moment, hanging on to the 100-week moving average, but here's the big but, the big caveat. We are in, again, what I consider a bear market. And if we look at the historical data on bear markets, there are some things that you may or may not be aware of. And one of those things is the kind of drawdown that we have seen and the length of time that we have seen other bear markets play out. Now, we can say that, oh, well, this time's different, right? We have the institutional adoption. We have the new ETH Fusaka upgrade. We have rate cuts. All of these things are true. However, we have all those things now, and price is fucking going down. So what does that tell you? That tells me that I can't white knuckle these narratives all the way down. It tells me that I need to pay attention to what is in the charts, what's in front of me right now, if I want to protect my portfolio and my net worth. So let's take a look at what the charts are showing us and what the historical data is showing us, and we'll go from there, right? You make your decisions on your own. I'm just showing you what I see. And what I have seen historically, and I'm going to clear out a bunch of stuff. Let me eliminate some of the noise on the chart for you guys. I know it's a lot, but I monitor a lot of stuff for you guys. Okay. For me too, of course. But so let's go back in time. Prior bear cycles or bear trends have been rather large. 75% down. This is early, right? This is way early in Bitcoin's history, back in 2011. And how long did that last? That lasted from November 2011 until January 2012. Very short, relatively speaking, right? A few months, which would be great if we had that at this stage. Back in 2013, again, it was a November event. And this time it was 86% of drawdown. And it lasted from the end of November 2013 until finding a bottom January 5th, 2015. Okay. That's a long time. That's that's longer than any of us want to really ride this out, but it is what it is. We can't control the time. But end of November, we'll call it December 2013 if it makes you feel any better, and going all the way to January. So that's a full little more than a year, right? About 14 months. Let's now look at 2017. Same difference, right? 84% drawdown, huge, huge. And when did this occur? Again, end of year, December 2017. When did we come back? December 2018, full year. And then the last time we had 77% drawdown, and this was November, again, end of year, November 2021 until the FTX crash, November 2022. We had a year-long bear market. Now, there are things that could come into play that would make you say, hey, I can't imagine this happening that long. There's the institutional, narrative. There's the election cycle narrative that, there will be midterm elections in 2026, and that, Trump is going to want to have the market very positive at that time if he has any hope of maintaining control of Congress, meaning Republicans controlling Congress. And so those are, again, narratives. So we could white knuckle hopium to that, or we could just look at the charts and let the charts tell us what's going to happen. And we'll know when we're in recovery, when what happens. We'll know we're in recovery when we reclaim this 50-week moving average. We'll know we're in recovery when these daily moving averages unwind. When we start to see the green 21 golden cross through the 50 and the 100 and the 200, it's on like Donkey Kong. When we see the weekly RSI make that recovery in conjunction with that recovery of the 50-week moving average, then it's on. And we had a bit of a fake out here in the last 24 hours where this RSI was peaking above 41 and price was peaking above the yearly open, but that was very short-lived. So it has come back down. Price has come back down. RSI has come back down. It's on the right trajectory. Not saying it can't happen by the end of the year. Just saying, as of right now, it hasn't happened. And so I'm prepared for more downside. Here's another reason I'm prepared for more downside, and you should be too. This is fire charts. These are standing limit orders resting in the order book. Okay. This isn't a liquidation map. This is a liquidity map. And what we're seeing here is a classic rug pull. Let me take it to the daily time frame. We had something going on here today, and I posted about this earlier, that we had, we basically have guardrails right here at like 91.7K and another one up here on the upside at 96K. And every time price approached this level, this was what, about 18 million in plunge protection here. And every time we would approach it, another 10 million would show up to block it. Okay. The top block got filled here. And then it happened again here. Another block came in. There was a little more fortified here down below. Went right. And then third attempt. Sorry, guys, out of gas. They couldn't hold it up. And so price punched through. And as I expected, this secondary block here, these guys had no intention of getting filled. If they did, they would have front run this block here. And so this has recently rug pulled. And historically, when this happens, this opens the door for more downside. And you can see the buy volume has dried up here. We don't have much buying happening here at the moment. We're coming to the end of the trading day. We've got about an hour and 10 minutes left in the daily candle. And so overnight session volatility going to bring obviously some, or the overnight session going to bring some volatility as well. Hola, Presidento of so much winning. President of so much winning. So much winning. I I posted something today, and I had to. Oh, I posted about this rug pull in our Telegram group, and I ended it with thank you for your attention to this matter. So there you go. So more downside happening here, in my opinion. You're like, hey, well, it's not happening yet. Well, no, it's not happening yet. These things aren't necessarily instantaneous. I mean, we did see right here when it pulled, we did drop a little bit, and at the moment it's holding. But I would say that there's a high probability. There's no guarantees. Nothing's 100%, but there's a high probability that this thing is going to drop through. And where might it go? Well, here's where the next set of bids are, right, at 86K and ladder down pretty good. Let's zoom out a little bit, and we can see where the liquidity goes. All the way down to 75K is where we have our biggest concentrations. There's about 47 million at 75K. There's another 45 million at 81. And obviously some insulation here around it. And we'll be watching to see if this rug pull, if these guys get filled or if they rug pull as price approaches. Time will tell, and that time might be coming pretty soon. So let's go back to the candle chart and take a peek at things as to what potential targets we could be looking at here, as this, if this bear market does indeed develop the way that it has historically. And so, glad you like it, Mr. President. So let's take a look here. And I'm going to switch timescape levels back on here because these do come into play, even the historical ones. So I like this yearly timescape because this is relevant to the current trend, right? So that's one of them. But the in terms of where we go from here, you look for, well, obviously the first thing you look for is other technical analysis that may support, may provide support. And it could be lower lows, it could be consolidation ranges, it could be key moving averages. All of those things could come into play. All right. So historically, most of the time, not all times, but most of the time, and not last time, but many other times, the 200-day moving average has held. So that's a target all the way down at 56K. We had some brief consolidation in that range. Not a ton, but we did have some consolidation in this, 55. Wait, where was it? Here it is, down here. Yeah, it was very brief, right? It was only a few weeks. Here in the 50 to 55 range, wasn't even that high. We had a double bottom here at 54. So this is all interesting to me. The 2021 top, to me, is one of the strongest consolidation ranges on the chart. If you recall, if you've been with the stream for a long time, if you've followed me for any length of time, when the Trump pump began in November of 24, right? We started getting these crazy rips up without much friction, right? It was like straight rips. And I kept saying, we got to have some consolidation levels. We have to have some consolidation levels so that on the way back down, because there will be at some point in time a retest of support, we need to have some foundational support built into the structure. So the longer we consolidate in those areas, the stronger the resistance or support in those levels. And so, yeah, we've got quite a few. This is where things kicked off, right? For the bull market we've been enjoying here for the past, during this cycle, was a consolidation in the 25 to 30K range. I don't think that's necessarily a high probability target. To me, I see strength in this 2021 top, right? This was the top of the cup and handle. We had quite a bit of time here, obviously, from our 2021 top until we hit it again in 2024. And then after initially touching it in March of 2024, it took us all the way until election day to break it sustainably. So March, April, May, June, July, August, September, October, November, 8 months of consolidation here. So this is, and everybody was talking 70K, 70K, 70K. The line, the technical line for me is at 69K, always has been, always will be. That is a legit target in my mind. Now, not saying that we have to go that low. There's a lot of sentiment for 75K. And as I just showed you in the order book, that's where liquidity currently is stacked. Now, nothing changes sentiment like price. And as price goes down, you're going to see liquidity start to move down in this range too. But for now, they're trying to hold it up here at 75K. They're trying to hold it up here at 85, 86, right? So what was that 86 number that we had talked about? Let's go back and look at the chart here and see if there's anything in that 86 range that looks interesting. I'm going to switch timescapes back on and see what we're dealing with at that level. 86 brings us to a prior consolidation range, right? This was an RS flip zone. For anybody new, RS means resistance and support. So this was a good range as well, legitimate target. And if we look, let's see if any of the weekly moving averages are down in that range right now. No, not so much. And so as we slip it down, it's this support range right here, this RS flip zone. I don't have a lot of confidence in that holding, to be honest with you, just with the timing and the sentiment. The 200-week moving average, that's way down here at 56, and we did spot some, that's in the range of this double bottom down here, and in the range of this brief consolidation we had here in the 50s. Crossing 50K would be psychological for me. 100K, 50K, those are all psychological levels. We had built some structure around them at this point, but they're still, for me, markedly psychological compared to any of the technicals. And so moving lower, if we were to move lower, you can see some confluence of multiple timescape levels down here in this 40, where are we? 46 to 48 range. We had some consolidation here in the 40 to 45 range. Where we see timescapes consolidated, or a number of them in one zone, that is additional strength. And where there's confluence with other technicals, for example, where we have confluence with, in this case, the 21-week moving average and the July timescape level, this would be stronger resistance here at this point. Where we have confluence with the trend line, this would be strong resistance at this point. Now, before I get all bear on you, the bullish scenario, obviously, like I said earlier, RS flipping the 50-week moving average and the RSI recovering this 41 level down here. I do think there's a chance that we retest resistance up at this 50-week moving average. And especially as long as this 100-week is holding. As long as this 100-week holds, we have a chance, right? That chance was, those hopes and dreams were dashed today with a third rejection here at the yearly open, but that doesn't mean that we won't get another test. It means that, well, for the moment, it's not happening. So as long as we stay above this 100-week, there's a chance to go back and retest the 50-week. And when that happens, whether that happens this week or this month, so we get it done before the end of the year, is anybody's guess. So It's hard. Like I said, timing is difficult for me. And we got somebody asking if I think we're going to hit 75 soon. 50 is full on bear. Well, in my opinion, 75 is full on bear too. And for what it's worth, at this stage, I have sold everything I purchased over 75. I've been building a position for years since the FTX crash in 2022. My average entry is sub 50K. And so, but I have leaned up a little bit to preserve some cash and have some powder set aside for when we establish a solid bottom. And for that reason, I'm I'm kind of hoping it's not right here. I'd like to go lower and reload. So, but I've only leaned up, like I said, a little more than 20% of my position. So I don't know. I do think that 75 is a high probability target. Uh, Again, timing is not my area of expertise. And quite frankly, I don't know how anybody can really call timing with any degree of accuracy. I don't know a lot. Let me rephrase that. There are a few guys, a few technicians, seasoned veterans who can nail that. That's not where I excel. So I'm reluctant to say whether it happens this month or not. I feel like it could, but I'm not going to make that call. I'm just going to watch the charts and let the technicals tell me, right? If we lose, obviously, if we lose the 100-week moving average, then yeah, then I think there's a good chance. I think that's the next target. I mean, quite frankly, that is my target from here. So time will tell. Let me see something on the monthlies. If we have anything in that range, moving average wise, we don't. Now, what if we get one of these nasty 70 to 85% corrections like we've had in prior bear markets? What does that look like? Well, let's just draw it out and have a look. From the all-time high, it would be down to the, let me get on the back on the weekly chart. I guess it's going to be easier to draw it on the monthly. Getting down to the 100-month moving average would be 71% and get us in the $36,000 price range. Going down to, that 25K range is your 80%. That would be shocking to me. Let me just make this easier to see. That would be incredible. I mean, that would get us down to where this entire cycle began. I'd be shocked if we went that low. I'm open to it, but I'd be surprised if we really went that low, to be honest with you. So again, that 75 range is a viable target to me. But if we get that low, I really think that 69 comes into focus sooner than later. And there's so much sentiment for 75K right now that I think that there's a good chance we go there, but I think there's a good chance it gets overshot. And if it gets overshot, people will be saying 70. And then when we go to 69, those people are going to get flushed out. And that is my, well, let me just put it this way. I'm not catching knives at this stage, but I do have a bid right here because I'd be happy either way to add to my position in this range. I don't go all in any position. I dollar cost average my way in and out. And so I do have a stack, little bit of bid liquidity stacked here to take advantage of that opportunity if we get a wick down there. Lower, we look at that 50-month moving average is down here around 56. Again, that's in a range where we had a double bottom here at 54. We had a brief consolidation here in the 50 to 52 range. The double bottom, if we protected this, where it actually wicked down to, this one wicked down just past 50K, right? It actually wicked to 49.5. Staying above this level would be a higher low, excuse me. And so that would be nice. Staying above that would be good. And where the moving average would be by the time we get there is anybody's guess, right? Let's go back to the weekly because I like that time frame. So that's an interesting one to me, right? And so if you look at how this is playing out, imagine the 200-week moving average pulling up in here to this 69K range by the time that grind happens, if it indeed develops that way. 74, 73, because market makers are slick. They are slick. And maybe they're paying attention to my streams and they're going to front run me at 69. Anything's possible. Anything is possible. So that's my outlook on Bitcoin. And again, this doesn't mean that we can't go retest resistance to the upside, even as above 100. Obviously we have to clear the yearly open at 93.3K to get to any of these other levels, but we have to have those weekly closes above the 50-week moving average and weekly closes above this RSI to have the conversation about reclaiming the bull market. And until then, I'm in the bear camp. Let's take a look at ETH. We don't spend enough time giving ETH the love it deserves. Well, that might be that might be debatable. But obviously a lot of news on ETH lately, the new Fusaka upgrade, and people are like, well, how come it's not pumping? Baked in? Maybe it's baked in. I mean, it's come up a bit in the past 2 weeks, sure, based on that news, but it was released yesterday, and now it's a sell the news event. If price can stay above the 21-day moving average, that might be good, right? Hang on a second. There we go. So watching this obviously to see if it holds. And if it doesn't, where are my targets? Well, I'm glad you asked. You can see that ETH is, like the macro, the macro up obviously has, long since been in a downtrend, but we have obviously been in an uptrend since that FTX crash. Actually, this is June of 2022. So even before that, this was the FTX crash. But look at this, on the trend line, recoveries. And so if we were to continue further, and depending on when it happens, this gets us down in the sub 2K range. 2,500 has been pretty sturdy here for a long time. So I think that retest is kind of imminent. But the trend line looks interesting to me. And yes, perhaps it gets overshot, as these things tend to do. So let's look at a timescape and see if we have any confluence between timescape levels. And lo and behold, we have a cluster of timescapes in the range of this trend line. We also have some here at a prior consolidation range that I marked. This is the July 2025. Here's the yearly open right here, right? Similarly to what Bitcoin is dealing with, got to clear the yearly open. And similarly to what Bitcoin is dealing with, we have death crosses. And they're a little bit behind where Bitcoin is in the death cross realm, right? We've just got the 21 has death crossed everything. The 50 is now death crossing everything. And what's left is for the blue to get drawn down here below the 200, and then they become completely wound like like Bitcoin is. So that's not bullish. If you want to build a bullish case, let's go over to, and I don't know that we can build a bullish case here, but let's take a look at what ETH BTC looks like. And I think I did this on a different exchange. Let's see if I have it here on Binance. I already draw this. Okay, so oh, maybe not. ETH BTC. What's happening here? Let me again clean things up a bit. So again, we have a situation here, but the 21-day moving average has not depth crossed the purple 200 yet, and it's trying to recover here, as you can see. And if it does, then maybe we start working our way out. This actually looks like it's attempting to break a short-term trend. Well, I say short-term, but it's kind of a medium-term trend since August, where we've been in a downtrend here. Let's do this. And to draw these, drawing artwork on charts is a bit of an art, bit of a science. What I like to do is move to line charts, so I'm not dealing with wicks, and draw my lines that way. And so here's the first iteration. We'll lay it over and see where that puts us. And then I will fine tune this a little bit, maybe go to a 4-hour and see if we want to make any adjustments here. And that looks pretty good to me, right? I saw a chart today where somebody laid it from here, like so. Somebody laid it from here to here, and on the shorter term, that looks like a breakout move, right? It is. It's a breakout above the moving averages. So it depends on how you like to, place your geometry. I like the longer term trends. The longer the term, the more accurate, in my opinion. And so with that in mind, let's look at this now on candle charts. Candles, let's go to the daily and see what this looks like. Okay, so on the shorter term, which would be from September, we have what looks to be a breakout. On the longer term, which goes back to August, we have what appears to be a rejection. So you can do with that information as you wish. The line here in the sand is the 21-day moving average right now. And so let's take a look at timescapes and see if we have any timescapes coming into play here. And lo and behold, we have the yearly open up here. So if you could get a breakout from this trend line, this actually would be an interesting setup here, right? If you could clear this, then even if you took it up to that next timescape level, if you could clear that, you could have a shot at just making it to the yearly open. That's not a huge move. That's only a 3% move. So you'd want a pretty tight stop here if you lost it, right? So maybe you take it make that risk to reward better. You get it on a breakout, you get a close above that trend line. And then still not a huge profit target, but you have potential here because you have the yearly open. That's a 4% move. You have the 100-day moving average. That's a 5% move. And so the way I like to do it is I would obviously be revisiting this to see what liquidity is looking like in the order book at that stage, and what the order flow is looking like at that stage. But I'm going to take profits along the way. And so I'll do split take profits, split TPs, and I use 3 commas for that. It's awesome. Whether you're automating or not, you can do that. And And so I can control that very easily with my 3 commas, smart trades. And this, if we do get the breakout, then maybe I've only sold 25 or 50% of that position, and the rest I let ride, right, to the next trend here, right? So if I do 25% here, 25% on the break above the other January timescape, 25% at the trend line, and then you break out from there, I still have 25% to go and let it ride. So that's how I view things. Again, not saying that that's the right way. It's just the way that I'm comfortable with. And so you have to do what you're comfortable with. Simple as that. Hey, Bryce. Hello. Nice to have you with me. I appreciate it. Appreciate the follow and the engagement. So that really, in a nutshell, is what I'm looking at on ETH and on Bitcoin. Another metric that you can follow. You've seen me share this a bunch, and that is this chart I've created. You can create it for yourself too. It's Bitcoin dominance, total 3 ES, stablecoin dominance, and ETH dominance. And you can see what's happening here, right? We had a big spike in stablecoin dominance as price was coming down, and now we have ETH the past couple days getting a little bit of traction, likely on this Fusaka upgrade. But this really gives you a sense of where things are going. Altcoins, your run-of-the-mill alts, if you are thinking that you're going to see a triple-digit alt season explode here for the end of the year, don't do it. Don't do it. Everything that matters. There might be some opportunities. Don't get me wrong. There could be some opportunities. But I would not go all in on alts. I think alts are going to have even worse drawdown than Bitcoin and ETH will. And I think, your hopium on alts is if there's a divergence between ETH and Bitcoin through this, and ETH starts to take off, then some alts will go with it. Not all alts, but some key alts will go with it. And you find your opportunities and you get in and you get out quick. Do not be greedy. Do not hang on for triple digits because you are very unlikely to get them. And pay close attention to this. Do not use leverage. I know that's going to be unpopular, but hear me out. There is not one noteworthy, experienced, seasoned analyst or trader that I know of, and maybe you know one, I don't, that recommends leverage. Leverage is great when you're winning. It will destroy you when you're losing. So be very, very careful. That's my 2 cents. That's my 2 sats, if you will. That's my opinion. Do with it as you wish. I'm going to leave you with a parting shot of the order book on Bitcoin. Again, we can see selling happening here. We haven't seen, why you haven't seen a big brown mega whale dump here? Because there's no liquidity, not enough liquidity here to sustain a multi-million dollar dump. He would just have slippage that shot all the way through. So that's why you don't see brown selling right here. They bought here into deep liquidity. They sold here into liquidity. If there aren't big bricks, brown isn't playing. Simple as that. And let's take a peek at ETH and see if there's anything interesting here. Not a lot going on here. A lot of air below, right? So what is keeping this up? Very little. There's a little bit of buying happening here from purple whales. And ETH BTC, I haven't looked at ETH BTC in a long time, but in case you're wondering, Fire Charts does support hundreds and hundreds of USDT and BTC pairs. So if you are an alt trader or you're a BTC pair trader, you're going to love this one. And this is why we're seeing that ETH BTC pair perform at the moment, is we have a little bit of buy volume happening here. So, and some pretty solid support at the moment here at 32.3. So that doesn't mean this doesn't rug pull, but at the moment, look, see, and this is so easy. This is so easy. You see this bid wall came in here, and what did price do? Price moved up. It is literally that easy. And then you see what happened here? Rug pull of a bunch of liquidity, and price starts to work its way back down. New bids show up. What happens? Price goes up. Bids step down. What happens? Price comes down. If you can see it, you can trade it. That is the value of fire charts, and you can get it right now for 33% off. And if you have been sidelined, if you've been interested in using these tools and you have been waiting for the price point to come down, we've done something that we've never, ever done before. Two things happening right now. Well, three, I guess. 33% off of everything at Material Indicators, any plan, any product, any duration. We rarely ever put monthly plans or lifetime plans on sale. Those are also included in the sale. So you can get it now for less than the price of a cup of coffee. And if you want to go Premium Plus, which is where all the tools exist, it's the only place you can get Fire Charts 2, which is this version. And it's the only place that you can get timescape levels indicator. But it comes with everything and a private community, and lots and lots and lots of data in the MI dashboard. We now have a 3-month plan. Used to be you could only get the shortest duration you could get was a year. So now you can get a 3-month plan. That's for a limited time for the holidays. 3 months. So the barriers to entry are gone. 3 months of Premium Plus with a 33% discount. And for anybody who's already in our community, if you want to upgrade to the lifetime plan, we give you 33% off that. And we prorate the value of your remaining time on your contract or on your existing license so that we can reduce your out-of-pocket expense. Those are the deals. Take advantage of them while they last. We're doing it for a limited time. And I promise you, it is going to help you trade smarter. And if it does not, read my lips. If it does not, 14 days. If it does not help you trade smarter, I'll give you your money back. Simple as that. No bullshit. So there's the deal. Hey, push winder sign, Aluka, or however I say that. Hey, good to have you with me. You're just in time for the end, but don't worry. It's all recorded. So you can watch it on YouTube. You can watch it on X. You can watch it in our Telegram community. But watch it. There's a lot of alpha in here. Thanks again, guys, for the follow and the support. I appreciate each and every one of you. I hope this information, this insight that I'm sharing you, helps you trade smarter. Have a good one. We'll look at it again tomorrow.